the property market is expecting yet another interest rate cut. The sector is basing this on inflation being at 3%, which is at the lower end of the Reserve Bank's target range of between 3 to 6%. The latest decision on the central bank's repo rate path is expected tomorrow, following the Monetary Policy Committee's first meeting of the year. The MPC had decided last year to cut the interest rate by a cumulative 50 basis points to sit at 7.75%. Another 25 basis point drop would bring South Africa's borrowing rate to 7.50%. Jawitz Properties CEO Herschel speaks to us now. Thank you so much for your time. Let's first unpack the basis of the property sector's expectations of another rate cut this time around.
So based on what we've read, based on, as you mentioned, the inflation numbers, we're expecting a 0.25% rate cut tomorrow. Obviously, we'd like something more, but it does come off the back of a 0.5% that we had last year. And obviously, the cumulative effect of those rate cuts start to have a more positive impact, both financially from an affordability point of view and from a consumer confidence and sentiment point of view.
So what has the difference been with the two 25 basis point repo rate cuts that we received in 2024?
So if you just take, for example, a R1 million home loan bond over 20 years, for each 0.25% cut in the interest rate, the impact in terms of lowering the monthly repayments is roughly about 180 Rand. So we've seen roughly 360 Rands worth of reduced payments for someone with a R1 million home loan. And obviously, if we get the 0.25% tomorrow, which by all accounts we should, that pushes that number closer to 600 Rand. And remember, once again, that's after tax money. And if you add that to, for example, the 5 Rand per litre approximately that we've had in petrol price cuts, individually they might not seem significant, but collectively they do start to ease the pressure on what's in people's wallets at the end of the month.
Absolutely. Lastly, what then is the near-term outlook of continued monetary policy easing in 2025, and to what extent really, and maybe what could present as a spanner in the works?
Well, I think, what's going to impact on further interest rate cuts is what happens with South African inflation. And obviously, there are lots of global factors that would impact on that as well. But there is no doubt that based on what we've seen up until now, based on what we've seen in terms of the residential property market and the reaction thereof, the expectation of further rate cuts has made it much more a positive impact on the market. Sentiment is improving, and so I think the outlook in terms of interest rates for the residential property market is good, both in terms of demand and price growth that will follow.
Thank you so much for your insights. Jawitz Properties CEO Herschel speaking to us about the expectations on the eve of the Reserve Bank's decision on the interest rate path.